recording here. All right, recording is started. So on the first session we had going, all right, let's see, what is it? Get about 10 seconds here real quick. I'll get my rundown. So in the first session, we kind of just covered some basic TA, right? Today I kind of want to talk about a little bit about the price action because it was pretty awful. There were some pretty awesome moments here, as you can see on these are hours at this point. As you can see, we had some movement here, right? So there was a little bit of movement in the last 2 days or so. But overall, as you can see, this looks like chop, and the best way to go through it is to zoom out a little bit. You can probably hear my dog freaking out in the background. My dad gets home, and he's all like, "Oh, God, I've never seen your dad before." Typical dog things. So even if you look at these larger time frames, you can really kind of see that, yeah, there are some moves, but if you weren't paying attention to the larger time frame, you got chopped out of here for sure. I mean, just look at this. I mean, this 10-minute candle here is just disgusting. I mean, this is 9:30 right here. This is gross. You know, so here's the beginning of the actual future session right here. And then right here is roughly the beginning of the actual trading session, real time RTH. So definitely a weird day. This is a day that you either play the range here back and forth. As you can see, the key levels still held up pretty well. If we go back to the 5-minute, these key levels that we plotted out, these are the same ones I showed you in the last TA session. You can see how they really kind of gave you some good risk reward to kind of figure out what was going on. The biggest thing that you want to look for when you have days like this is trying to identify the range, and we'll get into one of the key things I want to discuss here in about 2 seconds once we talk about this and figure all this out. But you see here how on this 5-minute chart we came up here, and I know this is before market open, right? But the ideology still applies. So we had this balances rejection off the 200 and VWAP here. This is on the 5-minute. So the 5-minute 200 EMA and VWAP, which is blue. I always have VWAP in blue. And we bounced and rejected off of that. When this candle here on the 5-minute close, so this candle here closes, this is really good risk reward to go long, right? So if you're trading futures, you could go long here and just put your stop below this key level, right? And you can ride this momentum up, and your target is just this, because we already know today's FOMC, you know, we got just the minutes, not the actual meeting, and then CPI data is tomorrow, right? So we know that we need to probably take our profits and just play the range really quickly. And as you see, that worked out pretty much for the rest of the day. You didn't have to get the whole move. You didn't have to top tick every single thing. But when you see, especially on the 5 minutes, little tweezer tops like this, you know, and you're long, okay, well, you're going to want to get out. Tweezer bottoms, this is still technically a tweezer bottom. I don't like this wick here, but the bottom part is what we're focusing on. They're not perfect because one wick is much longer than the other. I like to see them kind of more close to this, where they're kind of tight like that. But the ideology is still the same, right? So the ideology in this is still this, right? This is some kind of supply up there, right? You know, same thing here. This is still some kind of supply. So we know that, you know, if we bought let's say you bought the dip, right? You say, okay, well, I think we're going to balance. So you bought somewhere in here, right? Thinking that we might balance, and you put your stop loss like right here. You know, your target is really just go back into this range. You're just scalping this. You're not, days like today is not a day to be a hero, right? Now, if you did go short on this, on the close of this candle, because there was hesitation to continue higher right here, as you can see, this whole range up here is kind of a shit show, and it's above our key level, then you made out like a bandit on this 5-minute, you know, death candle here, you know. So this is, you know, that's awesome, but realistically, I probably would have been out here, even though I would have missed this whole move. I'm not trying to be a hero. All the plays I took today, I went 1 for 1 in real life, and then the rest was on paper, because I was like, this is not worth my time, right? This is too risky. If you traded it successfully, awesome, I'm glad. But most people should not be just trading this type of price action. And if you do, you want to go identify roughly the range. So again, roughly this range, we know shit's kind of not good, right? You know, and I know it eats into this, but yeah, futures, I'm a big fan of futures. I prefer it to options, but options give you insane returns, and there's people that I know that are not good at futures, but are way good at options. So let's talk about ranges real quick. I don't really trade ranges, right? I don't trade zones and ranges, but as you can see here, This is a pretty obvious range. I like to do these right here, candle body, and then wicks on both sides. That's my preference. There's a million different ways you can look it up. There's a bunch of videos in the EDU section in the bank tank for identifying zones, so supply demand zones. This one is not a actual supply and demand zone. This is just me drawing a range just to show people what's up, right? The actual zone would be down closer to like that, you know. That would be closer to the range. Even that I don't like because, again, there's not really a lot of data, good quality data. We're just trying to identify that somewhere between here and there is roughly going to be the range. Now, if we didn't have any continued price action down there, so really your range was closer to like, you know, these two down here, these two wicks right here. So that was really your range. And we definitely just kind of bounced around in these two ranges. The supply zone up here kind of holds, you know, we have a little bit of, you know, kind of demand here, as you can see all the way over here. Like if I took this and went all the way over, you can see that there's kind of a little bit of demand, and then it turned into kind of some supply every time we came up into this range. It's more that they were trying to put a lid on things and less of an actual supply and demand zone. There's a billion videos on this. I personally don't trade supply and demand zones. It's more of I understand it's there. And when you see a zone or a range with a lot of top wicks or bottom wicks, you have to understand that the buyers, you know, buyers down here and sellers up here are intentionally trying to prevent the price action from going higher and or taking profits, et cetera, et cetera. So it's more of just what we would consider market ideology, right? Or even some people call it auction theory. And so what you're seeing here is simple. Most people here, especially after the first session, you can identify this. What does this look like? It looks like, well, came up here and we sold heavy, right? And every time we tried to come back and reclaim this big giant candle, it got stuffed. But every time on the downside that we tried to break through this kind of range down here, to break through that, you know, and maintain the 3,600 loss, it kind of got bought up and then pushed back up to this range, bought up, pushed back up to the range. And now, obviously, now that the market's closed, we're kind of below that 3,600. So this has definitely been an interesting price action. We should always be careful on FOMC days, especially when CPI is the day after. Usually CPI comes out on Wednesday, and today we only had FOMC, and it's just the minutes, not the actual full-blown meeting. And then tomorrow's CPI data. There's a lot of fear in the market because people are thinking we're going to hit capitulation. Just trade the chart. Don't go in and say, hey, look, obviously things are bad. If they come out and see and inflation hasn't gotten even tiny little bit better, then there's a good chance we're going to go test lower. But other than that, don't fall with everybody else, all the furus and everyone else trying to say, oh, death is coming. You're all screwed. And we're not there for that. You know what I mean? Like, we're not there to have that kind of ideology. We're just going to trade the chart. Do understand that, yes, the odds are more likely that we're going to be a little bearish, right? You know, so yeah, log bias for 0DT is dumb. That is correct. Yeah. So don't let your bias control you. There is a possibility that they rip this up. If CPI comes back and it's not as awful as everyone thinks it is, if it's even somewhat decent, meaning it's not good by any means, but it's no longer getting worse, there is a chance that they cuck the crap out of all the bears and just rip this thing up and then trap the bulls and sink it into the abyss. So all things are possible. There's a guy named Tom that does some great EDU sessions on Bookmap. Thanks to Vengeful for pointing that out and sending that to us. He always talks about, it's like, where's it going? I don't know. Let's find out. You know, because we don't know what's going to happen. We never know what's going to happen. We just take the data and do the best we can with the data. And that's the ideology of trading. The ideology of trading is not to be the hero. I'm not trying to tick this with the short, you know. Now, the irony of me saying this is I did actually go short at 36.20 with a 5-point stop. And so I did, not here, on this. So I did kind of top tick it down to 3,600. But, yes, Eugen said all we can do is fuck around. And what happens when you fuck around, you're going to find out. But if you're smart with your risk management and understand that, you know, hey, 36.20 is a power of 10. We talked about this in the last session, right? Power of 10 on something like a 30, you know, 3,600 point stock. In this case, it's ES, so it's futures. You know, power of 10s hold really well. I mean, you can even see, you know, 36, where's 36.10? So here's 36.10. Look how well that price action held up there. You know, where's 3,600? Right there. Look how well that held. 35.90, same thing, held up very well down here. So and this applies to any stock. You don't have to do it with just this. So even on something like AMD, where, you know, the price is you know, what, 50 something? Yeah. So even then, you know that if we get back up to 60, there's going to be a wall of either buyers or sellers sitting right up here at 60. And same thing on the flip side, you know, like if you go down here, there's going to be an ass load of people sitting right here at 50, and price action is probably going to consolidate around there because it's a power of 10. So even though this is a much smaller stock, and you're realistically only looking, like in this sense, you could put on a stock like this, you can put one every full point because your trading range inside of here is not that large, right? So like, these are all major levels, and you can kind of see where over here, if you look to the left, I don't want to make the line go all the way over. Look to the left here where I have this crosshair, and you can see how well that full point value holds. It's still the same ideology. Imagine this as 57.00. Now it's a power of 100. So it might help you out with that. It might help you out kind of perceive and realize what's going on. So if you need to do that in your head and just put, you know, now you're looking at 5,700, even though we know it's 57.00. And if it helps you out to say that's a power of 100 or power of 10, whatever it takes for you to understand and grasp that price action at those levels, depending on the price of the stock, is going to react appropriately to that actual price. And it should, because there's going to be buyers, sellers, and primarily algos. Algorithms drive the majority of the market, right? Smart money still hasn't really started to come back into the market just yet because we're waiting to see what happens with everything going on geopolitically. Inflation's crazy, but the dollar's really strong because everybody else's currency is dog shit. So there's a lot of things going on in this market with that a lot of people a lot smarter than I am have pointed out in the market. There's a tremendous amount of stress in the market right now that there normally isn't. And it's unfortunate for us because realistically, you know, a lot of people here have only been trading for a couple of years. It's not long enough for most of us to really have the veteracy, you know, to be veterans of multiple styles and markets to handle all this. Thank God for people like Bullshark to be in here who are kind of anomalies in the system in a positive way because they're able to understand price action in a shorter time frame. So you're able to learn from somebody like that how to kind of get your money and get the fuck out. And that's really what it's about, especially in the current market. Leading into the coming seasons, right? Leading into what is historically the most bearish time of the, or a bullish time, bullish time of the year is right here. This chunk, pretty much from that October all the way onwards, this will be the inverse most likely. This is the first time I've really seen this hyper bearish as a trader, but I've also only been trading for less than 2 years. I've been studying the market for much longer because I just really enjoyed the market. But as an actual trader, I've only been trading since the beginning of COVID. You know, I was still there watching the market melt into oblivion, but I wasn't really trading until, you know, about pretty much since the bout started in COVID and right here. So pretty much around here. So what is this? Late 2020 was when I kind of started to trade. And so this is the market I knew. Well, that looks like a pretty easy market. I don't know about y'all. This looks like a pretty easy market, right? You know, so you got a little bit of chop right here in October. And then we bounced into the end of the year. Holiday spending numbers and everything came out. And we just kind of kept going. Look at the inverse of what happened here right there. So this is January. Look at this on the daily chart compared to this on the daily chart, which is the new year. This is 2022. A huge difference, you know. And there are some people, I don't really agree with this, but there are some people that are starting to point out that, you know, and I'm not going to line these up, right? What does that look like, man? Looks like a falling wedge, and it could trap and confuse a lot of bulls. A lot of people think we're going to kind of come down and test this pivot high, which we talked about in the last session as well, around 3,400. This better be a line that you have on your charts. This is one of the few times I will say you should 100% have this on your charts for ES, SPY. You can go into SPY and put the same, find this pivot high right before the COVID meltdown. That needs to be on every single chart that you have, is that pivot high, because this is going to be a really telling moment. And I've told everybody else the next one that I have is roughly this range right here too. So roughly 3,200 to 3,225 on ES. These are very important ranges, because below that, what do we see? We're going to see 3,000. And then below that is no dice. We're probably going to go way down. It's potential that we go down to even test the COVID lows. I don't think we're going to get that far, but I do believe that if we lose this support in this range, that we're probably going to go test that 3,000. Again, anything could happen. We could break this and be like, oh, here's the capitulation. Finally, we rip the Band-Aid off and then just take off. It's totally possible that we do that. Putin strikes a peace deal. Market's going to go, flying through the roof, right? Let's say something happens or politically in the U.S. and things look good, right? It doesn't matter who gets into office. Let's just say they do something and it really starts helping inflation, right? It doesn't matter who, it's irrelevant. Somebody somewhere does something, Biden or, Congress or whatever, and they start really combating inflation, supply chain issues kind of resolve, the chip plants that Intel, NVIDIA, and TSMC are building in America finish. You're going to start seeing the economy recover, right? You will start seeing some recovery in the actual economy, which will push the market, because the market is not the economy, right? And this will wrap up my ideology section. The market is not the economy, and the economy is not the market, but both can influence each other, right? So keep that in mind as well, that don't be fooled by saying, well, the economy is terrible, so the market has to be doing terrible. That's not true. That is not true, and does not have to work that way. But they do influence each other. So if the economy is bad, obviously the market will react that way. But the market could also go through the roof while the economy is bad, and vice versa. The market could pull while the economy is good. It's just unlikely, but it is entirely possible. The two are not directly correlated. They just have some influence on you. So that's the ideology that we need to be looking out for in the bigger picture. And in the shorter term, you already know everything that we've been talking about in the last session. Get your get your key levels, right? I like to separate my 1 hour from my daily and my 1 hours are separate from each other, and I keep those separate from the 5 minute and the 1 minute, as you see here. So I've got hourly key levels, as you see this one here, 35.88 roughly. Doesn't have to be perfect. Again, we went over this last session. Don't worry about being perfect on your key levels. Just get them good. They don't have to be perfect. You have to understand there's a little bit of wiggle room on either side of every key level, just like this one. Look, came up here, cucked everybody chasing. All the bulls that were chasing this breakout got screwed. Same thing down here. All the bears chasing this meltdown, thinking, here we go. Oh boy, get stopped out. And then same thing up here. Bulls chased this 3640 reclaim, thinking, reclaimed 3640. Here's the bounce. It's going. And then they got screwed. It's market makers are designed, unfortunately, to take your money. Again, I'll get into a rant about this one time. I'll probably do it in the next session that we do about some key things I've learned over the years and why I think market makers are genuinely the most evil entity in the economy, except for obviously the governments and the banks. The banks are less evil, in my opinion, than the market makers. Market makers are just literally the scum of the earth. So this is what you really need to look at, in my opinion. The 30-minute and the 1 hour, and then obviously your daily over here, to keep the really big picture in mind, right? You got to start keeping some of these bigger picture time frames in mind. They'll keep you from kind of falling into the wrong ideology, so to speak. Because we know, look at this, we know there's this giant falling wedge essentially building right here. This is definitely a falling wedge. The price action right here is a falling wedge. So it is possible that we kind of rip back up and retest this range up here and figure out what's going on up in this range. Hey, we might need to go price check up here or even up here real quick to see what's going on, and let's go price check that real quick. Tom, again, from the Bookmap community, says, price check on aisle 5. We need to go price check this range right here. As you see, that's a pretty good key level, right? Notice how price action reacts to this key level very well. We may need to come price check these 2 levels. We may not. We may fail this falling wedge and come tanking and finally hit capitulation, But the broader picture will kind of save you from making a mistake and being either too bearish or too bullish. Look at the 1 hour. A lot of chop, right? This is the 1 hour over here. Let's zoom this in. A lot of chop. You have some big moves. If you in intraday, these are great, good, solid moves. But zoom out a little bit, and what does this look like? This looks like coiling, some kind of consolidation for the most part, right? And that's kind of what I meant by looking at the daily over here, is that they're kind of coiling for something to happen. A lot of top wicks, but also some bottom wicks. Today, not as much. So maybe we finally hit what we want to do. We finally hit capitulation, or we finally rip some of the Band-Aid off, or maybe even we just finally go test lower. It may not even hit capitulation. We may just need to go test lower to see, like, hey, are we really going to melt down, or are we going to finally hit a point where the big money is going to start stepping in and saying, yeah, we're going to start buying. You don't think Berkshire Hathaway and all these other big conglomerates aren't foaming at the fucking mouth, ready to buy after they sold the top at 4,800 and now we're down here? And you don't think they're going to sit right here at 3,400 or 3,000 or lower and foaming at the mouth, ready to just buy the shit out of everything so that they can make billions and billions and trillions of dollars? It's really going to be something wild when we finally get this sell-off that everyone's kind of been waiting for, or even just the end of this kind of gross sell-off, because this is over 30%. We've hit a 30% sell-off at this point, so there is no actual need to continue selling. Now, I still am leaning that we are going to continue selling, but just because things are looking bad doesn't mean that we have to continue selling, right? We don't have to continue doing that. So don't let yourself be trapped. Focus on some of the bigger picture. Look at your daily and your 1 hour, 30 minutes if it's not enough. Like if 1 hour is a little too, little too broad, you can come here and look at the 30 minute and it'll give you a cleaner one. And then again, you can jump down to the 15 minute to get an even cleaner view. And then the 10 minute, and then your 5, your 3, and your 1. Now, I don't use the 3 minute anymore. I don't even really use the 1 minute. I just kind of keep it up for scalping purposes. And just to kind of see where I could enter and exit and refine it. I like the 5 the most. It's still just, that's my bread and butter personally. But you got to find what works for you. And I mentioned this as well in the last one. The whole point is to Bob Ross the hell out of this, man. You have to, speaking of Bob Ross, let me change my Bob Ross calendar real quick. You have to paint the picture and make sure you understand the picture. That's all that really matters. It's okay if your picture is different from Bob Ross's painting. If you're just trying to go along with Bob Ross, in this case, the big money, the market makers, we're just trying to get our chunk of the money. And I think I said something around, you're trying to get the bag from the teller. You're not trying to rob the vault and fight the entire army on the way out. You're just trying to get the bag from the teller, right? That bag is a lot of money. It could be $10. But you only have a $100 account, that's 10%. Could be $100, but you only have a $1,000 account, that's 10%. Could be $50 on a $1,000 account, that's 5%. That's insane. You get 5% growth per day, that's astronomical. So I want to move into the next segment of what I really wanted to talk about today when involving this session, right? Yeah, J Scout said, just get the bag. Don't stick around for SWAT. Facts. Exactly. That's what I mean. Get the bag from the teller. Don't worry about trying to rob the vault and then having to deal with SWAT and the National Guard. Like, you're not trying to do all that, man. Like, just get the bag from the teller. Metaphorically, if the FBI is listening. Metaphorically. So I want to talk about how do you survive this? How do you survive this right here? Something that I wish I had learned again many years ago. You survive this by sizing down. All right. That way, if you do come out red, your red is going to be pretty small, right? You're sizing down. You're taking your profits. You're still coming out green because you sized down, so your losses are smaller. You're making better educated assessments of what's going on. Again, a lot of top wicks right here. This is a great example. A lot of top wicks right here. I'm not going to take 10 contracts of ES or MES or even 5 contracts of MES, which is not too much. It can be substantial. MES, 5 contracts of MES is substantial for a lot of people, right? So, I'm only taking like 2 or 1 contract, shorten it up here and getting my quick little, 10, 20 points, and then I'm out. It's cool that it kept melting. That's cool. I don't give a shit. I'm just trying to make sure that I'm protecting myself instead of having what I'll lead into the next segment, instead of having the grotesque emotional indiscipline and collapsing and coughing up everything, which I'll get into in just a minute. But sizing down, especially when you're unsure. So we woke up today. When you woke up today, you knew FOMC. This is going to suck. They're going to chop the piss out of this and trap everybody because CPI is tomorrow. Why in the world would they let this rip in any single direction? They're never going to let you do that. They're never going to let that thing go. You're out of your mind if you think they're going to let that happen. No shot. They're going to chop everybody up and steal all of retail's money. Give me 2 seconds. I'm going to take a sip of this. So they are going to chop you up. So there's no need to be a hero. Follow along with Bullshark if you're really uncertain, but make sure you take your profits. So when Bullshark's leading the session, there's no need to wait for him to tell you, I'm getting out here. There's no need for you to wait. If you're up 20, 30, 40%, you bet your ass you better be scaling. And if you only have 1 contract, fuck it. You better take that money, especially you hit 40, 50%. You're not here to make the home run. Again, you're here to get the bag from the teller, not to fight the SWAT team trying to rob the fucking vault, right? If you have multiple contracts, that's cool. You can scale out one, put your stop loss at 20, 25%, and then let it ride and see if you can get the vault. Maybe you caught them in the middle of transferring money out and they just happen to be right there. You know what I mean?
Vault,
get the vault if it's there. But your goal isn't the vault. If the vault shows itself, you get the vault, right? If you walk into the bank and there ain't nobody in there, and there's literally nobody in there, no guards, no cameras, no nothing, okay, we're going to go rob the vault for sure. But if you're, in this sense, like right up here, I totally could have, in the practice account I have for a larger picture trading, right? I did take this. I think I got in like right about here, 36.30. I have it written down somewhere. I can't find it. I'll look it up later. But it was somewhere around in this range, right? Somewhere up in here. I went short and I wrote it down to 36.10 and I got out. And everyone, I showed it to one of my friends and he goes, well, why didn't you wait for it to come retest this 3600? You knew it was going to come retest this right down here, which as you see, I don't even have 3600 on here because I know it's a power of 100. I don't need to have a line there. If it helps you, that's cool. But I don't need to have that line there, right? I don't have to have, because I know it's there. You can see how price action, even on the 1 hour chart, is just beautiful around that line. But I already know it's there. I don't need to. I need to know the other random key levels like 36.13, which ended up being a phenomenal level even on the smaller charts. Where's my 5 minute? Look at this: 36.13, 2.5 to a T. I mean, this whole range up here on the 5 minute. See, same thing over here. This is the 1 hour. Notice how 36.13 reacted to it. I already know all the powers of 10, but what about the other random ones that are just like strange numbers? Well, I draw the key levels for that reason. I already know 3600. I already know 3610. I already know 3620, 30, 40, 50, 60, 70, etc. I already know all those things. You don't have to draw the line on there. If it helps you, go ahead and do it. Don't be afraid. Your charts are your own. Just like, again, like Bob Ross always said, your painting is your own painting. Don't try to copy somebody else's painting. Draw your own painting. Whatever helps you understand the picture and the market ideology and the price action is what matters most. These are things that I swear to God, I guarantee you every trader that is somewhat veteranized now would love to have known in the very beginning. Don't try to be a hero. Just get your money. You already know it. FOMC and CPI coming in. Get your 10, 20 points on futures. Get your 20 to 50% on your options contract. If you can scale. If you can't, take your fucking money. Take your money. We're here to make the money. We're not here to cough the money up. We're not here to give the money back. We're not here to try to hit home runs. We're here to get our money. We're trying to get our money and get the hell out, because we know there's chop coming. There's bullshit coming. They're going to run it up, slam it down, run it up, slam it down, and then we're going to see some wild shit tomorrow for CPI, right? So don't try to be a hero. That's your ideology. And we'll roll into the next thing on kind of how to keep yourself from doing that. Emotional discipline is the absolute number one factor in trading. I don't care what anybody says after trading, as long as I've traded, which is not even that long compared to most traders, but even listening to the advanced traders and the people who've been trading for 20, 30 years, emotional discipline is the absolute number one thing that you have to master. If you can't master emotional discipline, there's absolutely no reason to trade at all. Not with real money anyways. Go in and paper trade. So what happened to me? What happened to Logix when I was trading? Thank God it was a small account. Shout out Vengeful for keeping, and Bullshark for keeping me from going crazy. It's the first account I'd ever nuked. It took 2 days to do it. I have never had this kind of emotional breakdown ever. Ever. I have never had this breaking every rule, averaging down, refusing to stop trading, and just losing $1,000 account in 2 days. Just, and it was 2 different weeks, but it was those 2 days alone. If I hadn't had the emotional breakdown and I had just taken the $50 to $60 losses on those days instead of $500 losses on those days, I'd still have the account right now, right? I had external factors affecting my ability to remain calm. That's why emotional discipline is absolutely number one. I just never thought it'd happen because I'm very disciplined in that sense. I make sure that, if I hit 3 losing trades in a row, I'm done. I'm going to paper. I don't care if I dominate the rest of the day. I'm done. And I'm sticking to it. If I hit my max loss numerically, even if it's not been 3 trades, if I hit my max loss, I'm done. So if that kind of goes back to the, if you hit your max loss, you're done for the day. No more trading. That's it. You're done. It's over. You're done trading. Stop trading. There's absolutely no reason to trade when you hit your max loss. Get out. There's always another day. Live to fight another day. There's absolutely no reason to sit there and beat yourself to death and lose all that money. Zero reason. When it hits your stop loss, you get out of the trade. There's absolutely no reason to I'm just going to move my stop loss. I'm just going to, this is my stop loss right here. I'm just going to move it down. No, you know what? I'm just going to get rid of it because I'm right. I can't be wrong. I'm right. Fuck these market makers. Yeah, well, that's how you're going to lose money. That's how you're going to lose a lot of money because you didn't have the discipline, the emotional discipline to get out or obey your stop loss. And you have to. That's how they steal your money. That's how on options, futures, commons, small caps, medium caps, large caps, it doesn't matter. Penny stock, it doesn't matter. This is how they steal your money. You have to have the emotional discipline to understand, to cut it when you hit your stop loss. When you hit your max loss, you need to stop trading. When you hit 3 trades in a row, you're done trading. 3 losing trades in a row, you're done. Chef Nug says, there's always another EMA to move the stop to. Yep, never do that. Why do you think most of my charts are naked charts? Right? I have the 5-minute 200 and the VWAP, 1 minute 200 EMA and VWAP, and that's it. Notice how my larger time frames have nothing. And if you want stuff on there, go for it. If you want, where's my 5-minute? You want this? You want this? You want all this craziness right here? You want all this? Go for it. This is Sadie's. It's great, but you want this? Go for it. I don't want it. It's too confusing. Why do I need this? If you understand naked charting, why do you need that? If you understand naked charting, why do you need all that? Man, all these see even this, like previous day high and low, those are cool. I like previous day highs and lows, those are cool, but I like this better. I like clean charts. I like to bam. Clean charts. It's the easiest, it's the best way to learn. Afterwards, once you have kind of gotten used to being able to read price action, then you can kind of decide what EMAs you like, what EMAs you don't like. What indicators do you like? What indicators? I used to use MACD. I still do. I don't have it up here right now, but on my actual daily charting, I use MACD because MACD is really awesome if you know how to use it properly. I don't recommend everybody using it because people kind of just follow the indicators. Everybody's so busy. You're so busy looking at the indicator right here that you're not realizing the flow of the market. In this case, it was good risk reward, but in a lot of cases, it's not. Oh, it's going to bounce at VWAP. Nope. Oh, look, it's going to, we broke through the 200 EMA. I'm going to chase this short. You get stopped out because you were too busy focusing on the indicator with a lack of emotional discipline, understanding the rest of the market ideology. So you have to combine all of that. You hit your stop loss, you get out of the trade. You hit your max loss for the day, you're done trading real money, go to paper. You hit 3 losing trades in a row, you're done, you're going to paper. I don't care if you crush it the rest of the day. You get your ass up and go to paper because it develops discipline. And that's what you have to be a successful trader. More than anything else. The rest of this I can tell you. We could teach you TA till our nose bleeds, until our fingers fall off from typing 10 trillion different things. You know? But if you don't have the emotional discipline, you're never, ever going to be able to succeed at it. So we covered general TA, ideology, emotional discipline, the sizing part, size down. Tomorrow, follow along with Bullshark, obviously, because Bullshark's the fucking man, and he's really good at reading these things. But none of you should be trying to swing for the fences because CPI is here, and Bullshark's going to lead us into the promised land. That very well may be true, but at the same time, are you really trying to blow up your account? Because it's a strong possibility if you don't pay attention and you don't size down on days where things are going to get insane. Why don't you just, instead of taking 3 contracts, let's say 3 contracts of a position is your normal sizing, and you're going into tomorrow and you're like, well, it's CPI, so when the actual move happens, I'm going to take 5 contracts. And nope, you're gonna blow your account. And the worst thing that could happen for you is if you do that and it succeeds, because now you're going to try to do that every time. And one of those days, you're going to get fucked. And that's what's going to happen. You're going to lose a lot of fucking money. It's really, really brutal. Don't do it. So when to stop? 3 losing trades in a row, you go to paper, or you hit your max loss for the day. Okay? Those are the 2 times when you stop. So we have general TA, ideology, emotional discipline, sizing, when to stop. And then the very last thing I want to talk about is debatably the most important. One of the things I've struggled with for a very long time, and thank God that we have good people on this earth like Vengeful and Bullshark, and a lot of people in here who have reached out to me, and other people as well. And I hope that if you ever have any issues, you reach out to people here. We're here for you. Is mental health. It's probably the hardest thing to talk about, because everyone's kind of got a different issue. Some people have PTSD from real life incidents, or maybe a bad drug trip, or maybe something awful, or it could be even just PTSD from family life or something like that, or maybe you're chronically depressed. Don't be afraid to get away from this shit. Get away from all these screens right here. They're just screens, man. The market's always going to be here. Get away from this shit if you need to. Go away. Just be like, hey, guys, I'm going to take a break. I'm going to get the hell away from this. I'm going to go hang out with my dogs. My actual dog. I'm just going to go hang out with my dogs. And then I'm going to go to the bar with my dogs. Get away. Chill out. Go see the sun. I know we're going into the winter months, but get the fuck out, man. Go hiking. Go get away from all this stuff. Treat yourself. Make sure you get some kind of exercise, even if it's just walking. You don't have to be a workout freak. Just go walking. Go on a quick walk. You don't have to be fast-paced. Just get on a walk, man. And the healthier your body is, the better you'll be. But not everybody really cares about that, and that's cool, man. That's okay. You ain't got to be a workout freak. You ain't got to be in shape or any of that stuff. But just make sure you take care of yourself, okay? Don't compare yourself to other people. Don't ever do that, because it's probably, especially with social media, it's probably the most destructive thing in the world, right? And I know this is probably not what everybody's here for, but it just needs to be talked about, because it's not talked about enough. It's really not. Mental health is really bad, especially right now with the way the economy is, and geopolitical crap, and war, and potential nuclear fucking Fallout 4 style. We're about to be trading bottle caps instead of dollars, So make sure you take care of yourself, man. Please. And, if you need to relax and chill, if you need to have a good time, do it. Get away from this. And don't worry about, well, these people are making money and I'm not. Don't care. Don't worry about all that. None of that's important. And for those of you that don't know, this is being recorded, Furby, by the way, for everyone that is. It is being recorded. If my stream is full, go and hop into Grover's, for those of you that are probably just joining or are struggling to get in here. I will also be doing this if Bullshark streams during the day are going to start getting there. So, but yeah, in terms of the mental health, please get yourself straight in that sense. If you're financially stressed outside of trading, like I was for a long time, and even right now, money's still kind of tight for me. I'm very transparent. I'm not some big rich dude. Like, I'm very transparent about what I had. You know, I had the money and lost it all, got it all back and lost it all again. A lot of people been there, done that, right? You know, make sure you have some kind, like the money you put in your account, right? The money you put in the account, you have to pretend it no longer exists. Like, it doesn't exist. So if you put $1,000 in the account, that money's not your money anymore. It's gone. If you can't afford to lose that entire account and survive, you need to take some of that money out, right? If you're financially struggling outside of trading, you shouldn't be adding more stress by trying to trade. You can practice trade all you want, but again, get it to a point where, hey, I put $500 in the account, and you know what? If I lost the $500, yeah, it would suck, but I'd be all right. You know, I'd be okay. My bills are paid. Things are cool. You know, everything's cool. Then that's where you want to be. Don't be putting $5,000 in this and be like, this was my savings account. That's a terrible idea. You know, don't do that. Protect your mental health, man. Get away. Don't do anything stressful. You know, get away from this sometimes. Get moving. Chef Nug says, yeah, get moving. Yeah, get moving, man. Get moving. Get up. Go for a walk. Walk your dog. Spend some time with you. Just sit outside on, if you got a nice deck or even just a nice place somewhere nearby that you can just sit down and relax and it's not that busy and all that stuff, right? You know, but go out there, sit there, and no music, no phone, no nothing. And just chill. And just relax. And just have a good time. And get away from the phone. Get away from social media. Get away from all that shit. It is toxic on your mind. You don't have to believe me. Just try it. You don't want to believe me? Try it. Try it. Get away from Twitter. Get away from Facebook and Instagram and TikTok and YouTube. YouTube Shorts is probably the most addicting thing ever. I think it's a better form of TikTok. That shit is fucking addicting, man. So get away from all that stuff and relax and breathe. If you like anime, sit there and watch an episode of anime and don't feel guilty about like, yo, I'm going to watch an episode or two of anime. I'm going to watch an hour of anime. All right, or I'm going to watch an hour of my favorite show. Or I'm going to go do this. Just relax. Take a break. De-stress your mind. Get away from all this stuff. Trading is fucking hard. I don't mean this to be arrogant, but I'm an incredibly intelligent person. I'm very, very smart. I'm actually a Mensa level genius. And there are people way smarter than I'll ever be in my entire life. Like, hilariously smarter. Like, I thought I was smart until I met some of the actual Mensa people, and I was like, holy fuck, these people make me look stupid, right? These people are absurd. My father is incredibly smart. He's the same way, like, annoyingly smart. And there's never been anything I've applied myself to that I wasn't able to just dominate until I found trading. Trading is the hardest thing I have ever done in my life. And the only reason it was that hard is because of what I mentioned earlier. I didn't have the emotional discipline and the mental health to trade effectively. Even Bullshark just said trading is hard as fuck. It is hard. Don't make it harder. Exactly, Bullshark. It is so hard. It's okay to say, guys, I fucked up. I got clapped. I need some advice. What do I do? Like, size down, paper trade, get your confidence back, develop a plan, develop a thesis based on that plan on this trade. Based on this trade right here. We can go back to the charts for a second. Based on this 1 hour chart with these top wicks, when we came back in here again right here, my ideology was I'm going to go short up here and risk up to X amount, whatever it is, right? Whatever it is. I'm going to risk up to X amount, and until that thesis is invalidated, I am in the trade. Okay? I'm in the trade. And then follow your thesis saying my price target is here, and then here, and then here. So I'm going to scale out and then put my stop loss, scale out and then put my stop loss, and cut it right here. It's okay if it melts into the ground. I've got my bag. I'm out here. You know? Develop a thesis on the trade based off of higher time frames, and then look at your smaller time frames to confirm that thesis. Smaller time frame to confirm that thesis right here. Here is your 3620. There's my thesis. Go short. I'm going to scale here. I'm going to scale here. And if we get down here, I'll scale down there. Got stopped out right here because we started bouncing. I thought we were going to keep going, and I moved my stop right there. And then when this giant candle came up and all this crazy thing happened because it was FOMC, again, we're just pretending FOMC minutes didn't happen here. Let's say this giant wick wasn't here, but then we came and reversed it. Then I got stopped out. Guess what? My entry's up here. You think I'm going to give two shits if I get stopped out on a 20-point futures trade? No fucking way. But until, let's say I got in here, right here. My thesis wasn't invalidated. So until my thesis is invalidated, there's no reason to get out of this trade. So you have to think about, what is my thesis on this trade? And until my thesis is invalidated, then why am I getting out of the trade? Because it had a pullback? No. Did it hit your stop loss? Well, no. Well, did it break your thesis? Well, no. Okay, so why are you getting out of the trade? Because you panicked. Because you didn't have the emotional discipline to hold your thesis and your stop loss. If it hits your stop loss, oh well. But your stop loss needs to be somewhere logical. You can't just be like, well, I'm going to go here and my stop loss is up here, but my price target's like right there. Well, that doesn't make any sense. You know, like, that doesn't make any sense at all. You need to develop a thesis that's logical, stick to the thesis on the trade, follow with the trade. So until your stop loss hits or your thesis is broken, there's no reason to get out of the trade. And make sure you have price targets based off of key levels, right? Even if it goes even if it goes crazy, what if you're over here? Let's go back to the 1 hour, and I'll use this because it's a little bit of a clearer picture. So let's say, I get in up here somewhere, and we melt down here, and I know that's my first target. And then it gets to here, and you know what? I say, I'm done. This is good. That's a 30-point play. I'm out of here. See it. And I could have held, if I just held a little longer, look at this, I could have come down here on all this. But what if this didn't happen? What if we came back up here and now you stopped at a break even? You've lost all that profit just because you wouldn't take something off the table. Because you didn't have the emotional discipline to say, I'm not trying to hit the home run. All emotional discipline, market ideology, plot your key levels, and play appropriately with your size. You don't need to be grabbing 5-10 contracts on a smaller sized account because you're YOLOing into it thinking I'm going to make a 10-bagger on a small-ass account and everyone's going to worship me and I'm going to start a Patreon and scam people out of money like 99% of FinTwit. If that's what you want to do, go for it, but get the fuck away from me. Don't you ever fucking talk to me again. So, not a fan with that. You guys piss off with that scamming shit. Not a fan of that. Develop your thesis. Stick to it. Put your stop loss in where it matters. A logical stop loss. Somewhere that actually matters based off the price action or a key level. Develop a thesis on the trade. Execute the trade. Scale when you're supposed to. Chase it with a trailing stop. And if you get stopped out, let's say this happened first. It kind of came down here. I scaled and I was waiting for this pull down here. And then it came up here and stopped me out like right up here, right? And then melted down to the ground. Well, who cares? Was it a good trade? Yes. Okay, well, are you profitable? Yeah, but, you said, but there's your problem. You shut the fuck up with that. Just trade your plan. If you get stopped out and you're profitable and you executed a good trade, you stuck to your thesis and you stuck to your stop loss, who cares? Day said, it's not trading that's difficult, but rather it's us that makes it difficult. That is very correct. Like I said, emotional discipline, Emotional discipline is absolutely crucial. Because if you develop the thesis and you have your stop loss and blah, 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 that'll just repeat it like 4 times over, then you'll stick with it. There's no reason to not stick with it. So develop your thesis, be smart, take your profits, don't worry about it. Don't worry about, I could have been more green. Okay, but were you successfully green? Did you trade your plan? Yes. Okay, well then who fucking cares? There's always somebody out there making more money than you, doing better, who's famous, especially in my case, better looking. Like there's always, it doesn't matter. None of that matters. The only thing that matters is sticking to your plan, trading, getting your money, and being successful and keeping your losses small, right? We all agree on that. Yes? Can we get yeses in the chat? Does everybody agree that is what we're supposed to do in trading? I want to see yeses in chat. Yes, yes, good. That's what yeah. Ones, yeses, that's cool. Perfect. I love it. Awesome. Love it. That's everything I wanted to talk about today, guys. I hope this helped so much. I hope this guy helped you kind of learn from the mistakes that people like myself have made. Learn from Bullshark, learn from these guys. They are very knowledgeable. Maddie's here, very knowledgeable. Rizzy's here, very knowledgeable. Vengeful's here, very knowledgeable. Everybody here, all these analysts, all the legends, they're all very knowledgeable. You don't have to trade the way they trade or exactly how they trade or what they trade or when they trade it. You just have to do it at a reasonable time. You have to learn from them, say, hey, this little tidbit from them has really been helping me out. I think I'm going to continue incorporating it into my style. So keep doing it. It's awesome. I hope it helped you guys so much. I hope tomorrow you come in with a little bit of caution, size down if you're unsure. I would not recommend trading the chop before CPI data. I think it's pre-market, actually. Yeah, I think it is pre-market. CPI is pre-market. So you'll get the reaction pretty quickly. And, be smart, be intelligent. You know what? Don't trade at all. If you go at the end of the day and you go, man, I just couldn't find an entry. Everybody else made a bunch of money. Cool. But I just couldn't find an entry that was worth a damn. Okay. Perfect. You protected your capital. You survived. That's all that matters. So do that. If you have to stop, stop. Yes, cash, exact. Green Trade said cash is a position. That is very true. Sitting full cash is a position. Taking 0 for 0 is a position in my mind. And it should stay that way. If you're not ready to trade, don't trade. If you wake up and you're like, dude, I have bad mental state, like it's not working, right? It's just, it's not working. I just don't feel it. Like the vibe is off. Paper trade. Who cares if you make it big on paper trade? And like that, who cares? You were just there to execute because you know what? You were protecting your capital mentally and literally protecting your capital. And that's all that matters. Surviving is what matters. Being smart. Executing properly, that's what matters. Why would you stress it? Life is already hard enough, man. The life for everybody, everywhere is hard enough, man. You can have a lot of money and be depressed. You can be broke and be depressed. You can be broke and be happy. I know some people that have never made more than $30,000, $40,000 a year in their life, and they are the happiest fucking people I have ever met. They are truly, genuinely happy as could ever be. They don't give a shit that other people have more money. They are living a good life, and you know what? They're financially stressed, but they don't care. They're just having fun. They're enjoying life. So do what makes you happy. Don't make your life harder than it has to be. Don't risk more money than you're willing to lose. And let's go kick some ass. Yeah? Everyone, that's it. Hope you all enjoyed it. Go enjoy your evening. And we will see you tomorrow for the insanity that commences.